All right, guys, CPI just came out and it was pretty large. Remember, we're not looking at inflation as being good or bad. It's just it's something to consider when it comes to looking at the overall economy. Inflation rose 0.5% in January, which was a big jump compared to last year. It was more than expected. Now, I believe they changed the way in which they measured inflation on this one. I'm not going to really get into that. Obviously, over time, there are going to be changes to different metrics. Don't look at it as necessarily a manipulation by the government. I don't want to get into that conspiracy theory out there. Remember, the basket of goods over time has changed because, as an example, and I'm not saying this is part of the basket of goods, if you had a Walkman back in 1985 as part of the basket of goods, how useful is that as part of the basket as time goes on?
It's very useful now.
Now, for example, toothpaste is part of the basket. What if all of a sudden they invented a way that you didn't have to brush your teeth but once a year?
That's what I do now.
You would not have toothpaste as part of that basket anymore. So there are going to be changes over time on CPI. The bottom line is, for the average person, there are going to be issues. When your costs are increasing, your income is likely not going to increase at the same pace. The market reacted very quickly by dropping big time. But don't worry, it went right back up the second it happened.
As per usual.
So, Mo, you have the release on an article that we pulled from our website, Everything Money. We get a data feed of news from CNBC and other big contributors, and this is a CNBC article.
Yep. So Paul went over it. It rose 0.5% for the month and 6.4% compared to last year. So rising shelter costs accounted for half of it. Energy was significantly up. You can see it. 2%, that translates to 8.7%. Food, 0.5%, 10.1%. I did a poll on the morning show this morning. 85% of people said that they do not feel inflation is coming down. That was out of 230 votes.
You know, and it's funny because...
And mostly we were talking about grocery costs. So
it's interesting, Mo. You hear that on the morning show, which I believe a lot more because it's a lot of people. You know, then I went to a wedding back in October, and a mutual friend of ours was sitting at the table with me, and he said, Paul, I was at a restaurant, everybody's talking about inflation, and everybody here is eating at the restaurant, it's super high-end restaurant. I go, and I want to say, hey, that's because you have money. Like, you make $400,000 a year. That is not affecting you like it's affecting somebody who makes $40,000 or $30,000 or $20,000. They
actually have to balance and tailor their budget back and move monies around, et cetera.
Yeah, eggs going up 800% or whatever the number is going to affect somebody making $20,000 a year infinitely more, essentially, than somebody making $400,000 a year.
Right.
So I want everybody to realize this is the way we're not looking at it from the perspective of from our tower here saying, oh, it's okay. No, but there are things that inflation can help with. It does jump up GDP, right? And
home values,
because at the end of the day, if you own a home and it costs 50% more to build that same home today than it did a year ago, there's no way your house is not going up in value. Now, obviously, if rates go up from 3% to 15%, it's going to affect things. But we're looking at things from a long-term period of time. We have had big inflation many times in the past. Look at 08. We had big inflation in 08. People won't remember that.
Yeah, everybody just thinks to the 80s.
Yeah, they all think we hit 10% inflation, I believe, in 08 temporarily because energy prices skyrocketed.
Yeah, I remember.
In oil, a barrel of oil jumped up to $140 per barrel.
That was back then.
In 08. Yeah. So what else you got, Mo?
So there were things that fell. Medical care costs fell. Airlines were down 2.1%. I don't see that, but it's okay. Vehicle prices dropped 1.9%. So there are things that are coming down while other things are going up. And you're going to have that. We've seen this in every single CPI report so far. Some things are up, some things are down.
Yeah, not everything's going to go up fully all the time, very quickly. It's a mix. Like, remember, we had energy declining for a while now. What's the NASDAQ at now?
So when I opened this, right before I started reading that CNBC article, this was at 0.4%. Now it's at 0.22. It's already been cut.
By the way, it was 0.88 at one point this morning.
There you go.
But it was down 1.07 at one. Guys, I watched the NASDAQ for a couple of reasons. One, I believe they're the highest flying stocks and they're the ones going to be hurt the most. Two, I have a short on the NASDAQ. So obviously I'm biased in that regard. But I sold puts today on Google and T. Rowe Price at lower prices today. Why? Because I do like those companies in the long run, and I don't know what those companies are going to do during a downturn. Do I think they'll go lower? Absolutely. Then I'll just buy more shares. So one of the things I want to show you guys about the benefits of inflation If you've watched this channel before, you've seen this stock market to GDP ratio. The theory behind it, this goes back to 1929. And Warren Buffett has always said that the stock market to GDP ratio at any given time is the most reliable metric on valuations at that moment. Okay? So I went back to 1929 and created my metric. We're currently, as of this morning, at 70% overvalued. But look at this. Look at GDP. There's two ways this number can go down. GDP going up or stock prices going down or a combination of both. Look at how much GDP has skyrocketed.
It's amazing.
Just in 2 years, from 21.7 billion to 26.1. That's 4.5 trillion, trillion, not billion. Yeah. The last time it went the previous 4 trillion took, going back here, 8 years.
That's amazing.
So, yes, obviously 2 years versus 8 years. Why? Inflation. That's it. Inflation's what caused this. So it can make stocks a lot more valuable in the long run by driving up GDP. Now, if you're watching this channel, there's a reason that matters to you because you're probably trying to learn about investing. And remember, as GDP goes up, the stock market will become more valuable in the long run.
Not immediately.
Now, right, because we are still seeing a drop in margins for people. Because remember, it takes a little bit of time to translate these costs to the consumer and the benefit. And so then let's go to this.
Okay.
What does this mean for the Fed? Because that's what everybody's wondering is, hey, what's the Fed going to do?
So common sense, based on everything they've said in the past, means that they're going to raise interest rates more or need to be more aggressive in their rate increases. Meaning instead of doing 25 basis points, maybe they jump to 50 or go to 75 again. Or the terminal rate that they say is going to be 5 to 5.25 is going to go to 5.5 to 5.75. That's what this told me this morning. Is that true? I don't know. I've been really wrong about everything in the past 2 months. Defies logic.
Yeah. The Fed, so part of the issue the Fed has is we have very low unemployment.
Yeah. They're on a tightrope.
Yeah. And we have their biggest issue right now is the labor market. Yeah. They're looking at saying, how do we fight inflation when the unemployment rate is 3.5, 3.6%? Mm-hmm. How does that happen? That's the problem. When you have such low unemployment rate, companies have to pay more and more money to get the really good workers. Yeah. That drives up everybody's labor. That's a benefit of inflation. Everybody's labor costs go up. That's what drives inflation. If we all of a sudden paid everybody in this world $1 million a year as minimum wage, a lot of people out there think, oh, that means everybody's a millionaire. No. All of a sudden, everybody's costs skyrocket, and it goes. Eventually, at some point, it goes right back to normal. We're now minimum wage is $1 million. It's no different than having minimum wage at 15.
Sure, you're a millionaire, but millionaire doesn't mean anything anymore.
Doesn't buy you $1 million worth of stuff anymore.
Exactly.
Because then every Ferrari will be, instead of 300,000, it'll be 5 million or whatever. No, more than that, like 10 million bucks. Yeah. So that's the thing I want everybody to remember when they watch this video. Too many smart people out there believe that raising the minimum wage just makes everybody richer. It does not. It's inflationary. Mm-hmm. And I'm okay with that. But I just want everybody to understand that when going forward, to realize that you can pay everybody in this world whatever you want. At the end of the day, if we have to pay everybody at McDonald's $50 an hour, what's the cost of your Big Mac suddenly?
You're not going to have a dollar menu anymore.
You're not going to have a dollar menu anymore. Your dollar menu is going to be 2 pieces of fries.
Yeah.
That's it. So you're like, hey, thanks. Here's 2 pieces. Here's 2 fries. Not 2 whole fries, 2 little pieces.
Yeah. It's going to be like a 3-star Michelin restaurant.
Yeah. Oh, God.
And by the way, everything's negative now.
No way.
Yeah, everything's negative now. The 3 major indices are negative now.
Listen, if you like this, you got to subscribe to the channel because we talk about this stuff day in, day out, 2 or 3 videos a day. We analyze stocks. If you like this video, please share it with somebody. That's all we ask. Thank you very much for your time.